Hey everybody, welcome to Many Markets. I'm T. Today we're going to be reacting quickly to this popular, what does this have, 7 million views, July 2026, video where this guy interviews this investor. I watch a lot of investor interviews. I thought it'd be cool to just sort of run through them and give quick sort of thoughts and reactions, because I always have opinions. I always find some stuff interesting, some stuff I think is stupid, and I think a lot of people have trouble contextualizing this. So, because of my training, I usually have a better idea, having gone to business school and studied finance. Okay, so we're just going to run through this much of it, or however much. At some point, they start talking about not finance stuff. I don't really know this channel very well, maybe come across it a couple times, but we'll just focus on the finance stuff. I am going to try and go as fast as possible. Even starting this, I now realize this is going to take longer than I thought, but I'm going to try and burn through it as quickly as possible. Okay.
Jeremy Grantham, your firm managed up to
That's
100.
not really, I don't really care about this. A lot of this stuff I don't care about at the beginning. I've listened to this through, because, yeah, and if you have one, you should post it. If you have like finance one you think it's interesting, send it to me. I can send you thoughts. Maybe I'll watch it all the way through. Alright, so he's managed like, I don't know, I forgot, like 120 billion or something. It's like a billionaire, close to a billionaire. I know he gives away most of his money apparently to like not-for-profits having to do with environmentalism. AI, I don't care. None of this is memorable, so I'm just skipping the investing strategy for right now. Alright, I think this is where it starts to get
For the average person, what kind of strategy should they be adopting if you're not someone that has a huge amount of savings? Say you're working for one of these big companies. Are there any strategies that you should be thinking about now before the markets come down and there could be a recession?
I mean, rule number one is always be diversified.
What does be diversified mean?
Yeah, so
It means whole.
be diversified is interesting. There's a lot of controversial stuff. I think Buffett and like Munger have talked about how it's like overrated. Mathematically speaking,
Wholesome.
There's a lot of math that you study in business school that basically says
Bonds, wholesome
diversified
cash.
makes sense.
Perhaps a small amount of precious metals.
This is interesting. So he says cash bonds. He's basically saying
Like gold and
basic
silver.
stuff, I think. It depends on who you talk to. Like gold, silver.
And what is a bond? And how do I buy one?
Yeah,
So at some point here, he says, the interviewer asks him, like, gold or silver? Do you have a preference between gold or silver? And he says no, which is I think is really interesting. Let's just see. This is like a broad gold index, I think. I don't really know a lot about, I don't know a ton about this space, but if you look at this, beta is like, here we have what's the stock's beta over here. This is a metric that people, when I was saying finance, it stood out to me is because you don't, it tells you like how volatile basically a stock is relative to the market. I may not be saying that right. Read up the own definition. I'm kind of trying to understand it. Excited increase or decrease of an individual stock price based on the proportions movement to the stock market as a whole, right? So it's basically saying, right, like if the stock market changes $1, this should change 16 cents, right? That's my understanding of it, right? So this is gold. And then silver, let's do SLV. This is like, I think mostly silver that's like already owned. And that's 0.88, right? So that's a much higher beta. So I just think it's interesting that he has like these strong opinions, and when it comes to gold and silver, he's like, meh, doesn't matter. At some point, or he just said no, like, and I found that to be a curious answer. The avoiding U.S. stocks thing.
So I've got diversify.
Interesting. I mean, long story short, he's like, basically things are trading at like 32 or 30 something times earnings. International stuff is trading at half that. So U.S. stuff is historically expensive. And then he talks about why investors mislead clients.
Watch your tail. Now, let me just say, you will not receive the advice from investment advisors to get your tail out of the market, ever.
So
it is not good business for them to do that.
This I've found to be generally true. There's all sorts of things. There's all sorts of reasons why investment people never tell people to get their money out of the market. Mathematically speaking, it actually makes it tracks, right? Like there's this whole, or you lose more money like being out of market. Like time in market is more important than like when you buy or whatever, or something like that. But to never advise someone to be out of the market, I think is it raises some flags for me. And it's part of why I have this channel. So, advice for entrepreneurs.
What about for founders? I actually have found a call me the other day, and he is running a relatively early stage tech startup.
Oh yeah, he basically says like, he's gotten as much money as possible before getting out of the market. I think the PayPal people did this too. You know, you just want to raise money when it's a good time to raise money. Timing is huge in entrepreneurship. So this is what's interesting, is sort of the like, I mean, this is about, a lot of this is kind of about timing. It's kind of going against the thing of saying like, don't time the market. Real risk of AI. We're going to avoid all the AI stuff. I don't think I found any of it. Maybe I just don't remember.
What do you actually think about the technology at the heart of all of this, which is artificial intelligence? Do you think it's overblown? Or do you think it is going to have...
It's going to change everything. One of the spectacular things about it, though, is how there's no consensus. So I've seen many times where the super experts and the academics think one thing and the players on the ground think another. But this is a situation where the Nobel Prize winners at the top disagree violently. The experts at the corporate level disagree violently. The people in the company disagree violently. There is absolutely no agreement on whether AI is going to make us all so rich we can sit on the beach and never do another day's work, or it will wipe us out.
This was actually interesting. I don't know if I want to rewatch it.
Accidentally or on purpose, because it's a much higher level intelligence one day. And when was there ever a case where a higher intelligence was...
I would say, it seems to me like anybody with a really strong convictions around AI is kind of like, probably very few people should have very strong convictions around AI. Maybe people who are actually developing it, which is very few people. Everyone else, I think, like, I don't know how people have like such strong convictions. I do think it's significant. It does seem like a very significant technology to me. That's all I know, is that it seems that way. Talk a lot about SpaceX and how it's expensive. I think it's trading like 108 times revenue or something right now. It's really difficult. I would love to know what people think about SpaceX. I want to get into valuation of specific things more. I spent a lot of time doing that, and now I sort of do a quick and dirty version. SpaceX is interesting to me because it's pretty much monopoly. It does seem expensive, but all monopolies kind of seem expensive. Tesla has kind of always seemed expensive. Maybe it always has been, but also like, I don't know, at some point it will be. I would love to try and value SpaceX, so anyone with an opinion should type in on that. The most valuable skill in the future. What's this?
You've got 3 children? Yes, 3 children. They're all, older than me now, I believe.
Oh, yeah, he basically just says, like, get into AI if like money is all you care about. That's a simplification, might be weird, but
forecasting.
I think there's quite a good chance that the level of complexity of our civilization will start to unravel. Lose the plot at the end is the first thing that would go. I'll tell you a good sign. How long does it take to get your ambulance?
I found this guy interesting, man. I kept watching for a reason. I don't know why. The way he talked about things was a little different. He
1975.
He kind of goes down on crypto later.
1% of Americans control 31% of the nation's entire wealth, and by contrast, the bottom 50% of the entire population shares just 2.5% of the wealth. The richest 10 US billionaires saw their wealth surge by 526% adjusted for inflation between 2020 and 2025. Between 1989 and the mid-2020s, the financial gain of a single household at the top 1% threshold was 987 times larger than the gain of a household in the bottom 20%.
Man, I hate
8%.
In a sense, the bottom 20% is tragic, but the guy in the middle, the 50th percentile, he is unhappy also. And when your average guy is unhappy because he's not doing very well, you know you have a problem.
What is that problem? This inequality we're seeing across the Western world, what does history tell us happens next?
All bad. We had a similarly unequal society back in the so-called Gilded Age of the 1880s and 90s and so on. We got lucky in an ugly way. We ran into World War I, which was catastrophically expensive, killed off a huge fraction of the officer class. And then we went into the Great Depression. Then we went into World
Killed a lot of the officer class.
War
That's
II.
interesting.
We came out.
I want to know. I actually want to know. I think that one's for me later. Actually, maybe not. All right. The body commissioned officers, warrant officers, not commissioned, whole position of their arm first. Okay. It cut off a lot of armed people. I don't know why. I was looking up other reaction videos. I think that's what picked up. I was like, oh, is reaction still a thing? Alright. So, basically says he's bearish on Bitcoin, which is like, he's bearish on crypto. Like, that's a pretty much just okay boomer. That is not to say, I think there's a lot. I would not say I'm bullish on crypto. But I would say I'm neutral. I am neutral. That's all I'll just say out loud. I'm probably more bullish than neutral. Property. I think he says...
What about property as an investment? Because the first reaction most people have when they have enough money to make an investment or to buy something is they buy property as an investment asset. So people go buy themselves a house, they'll move into it. We're kind of told that that's how you start to accumulate wealth, is you go buy yourself a house. What do you think of that?
It's hard to imagine how it could be a good decision when there's such an
Yeah, I thought that's worth watching. He basically just breaks down the numbers.
increasing fraction of people who can't afford it. And there is political resistance here.
Doesn't that just mean that if
It's like... he's basically just saying like houses are more expensive by like a ridiculous amount, so it doesn't really make sense. I think that's what it was, but that's worth watching. What's really causing the baby loss? Awesome. Well, that's the full run through. Thanks for tuning in. Yeah, if you have a good interview with money managers or just like smart intelligent business people, put it in the comments, please. I'd love to check it out. I could do another video like this on it. All right, catch you in the next one. Peace.